The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 5th day of April. My pleasure to be here. The Tiger Technicians Hour, 12 till noon till 1 o'clock each day. This is a very interesting session. We've got a plus 330 in the Dow. The QQQ right now is up $1.48. It's up 0.93. The S&P is up 0.98 and the Dow is up 1.3. So this is once again quite select in that there is a bias towards the cyclicals at this particular point. Very interesting. Now, this is going to be very important. You see this candle right here in the QQQ? See how it just missed touching for the third time the 200-period exponential moving average. This is the daily chart. This is the weekly. This is the monthly. What's really, oops, this is the monthly right here. There. Here's the monthly, held the 9-period exponential moving average on the most recent pullback. What's very interesting about this, when I look at the different sectors, the techs, the semiconductors, the cyber stocks, etc., I'm looking at this and I'm saying, this is a really nice bounce, but so far I have to call it a bounce, but it depends where you are. For instance, the Qs are still going to be struggling. I think that for most of those stocks, a timeout is needed, and that's going to be very important. There are some areas, look, within the context of the QQQs, the weekly chart, the MACD is still very, very poor. The stochastic in the weekly chart is 54% is not very good. So now let's just run these through, and I'll show you something very interesting. In the Dow, we've got to a trough D, having gone to a lower low. You remember that Roman candle? I said there's a real good chance that we're going to test the low. Just either get there or touch it or just break under it. Well, we went from 23,360 to 23,344 just a few days ago. And now what we're looking at is a bounce above the 9-period moving average, but the stochastic is at 28%, much lower. It's already had a deeper correction, and the MACD is still very negative. The action that you're looking at in the daily chart says, yes, we finally got that crossover positive in the MACD. The stochastic's at 39%. It's good, not great, but good. Unbalanced volume is rallying. So I'm looking at this, and now I'm going to extend the chart. I'm going to the contractor so you can see all the way to the January 26 high of 26,616. Chapman wave 2-bar reversal. This is a myriad techniques that we used. Minus 12%. We did go short, then we covered it, and we went long, and we covered that, and we sat out, waited for the most recent short at 25,000, just over 25,400. And at this point, I'm remaining short in that position. I have a feeling that's going to get real close because of the position that we have to be taken out. But I'm anticipating this is the lowercase h that's going to go to a lowercase m formation. So we've got another arch under the previous high of 25,800. In the Dow, I think it's a case of lower lows and lower highs, but this could be a very frustrating thing because I think we're setting up a big rectangle formation that says sideways trading band in some of the indices, lower lows and lower highs in some of the others, and you might see one particular sector really take off here, and that's going to be how this rotational correction will continue. So the lowercase h pattern in the weekly chart of the Dow says, yep, this is a great thing. Yeah, now you're getting that second arch formation. So we'll be watching that, and that's really important in terms of we just missed for a couple of days, just missed going along. I wanted to go along here. I wanted to trade this. I think it's a tradable rally that we have, but we have something else that we bought this morning, which is doing very nicely as I'm treating it as a counter trend rally. Now let's go to the S&P, SPX.X. So the Dow's up 1.28%. The S&P is up 0.89, weaker. but still there's that H pattern, but it did not take out that left side low of 2532.69. So if you're talking about timing, then there was about a 10, almost 11% correction from the January 26 high. Then there was a really good rally from 2532 to just on 2800. Then a sharp pullback, but not as sharp as before. And I suspect here again we're going to be seeing an arch formation. Very nice turnaround. All the indicators were lower except the on-balance volume. The on-balance volume is telling me that I've got to treat this right now as a counter trend rally. There's the H pattern in the weekly chart. Peak Ds. We had a whole webinar the other night. What was it? Tuesday night on the lowercase h, on the peak Ds. It's still available if you want to be a subscriber. It's a current thing. It's not like it's just there and it was there for the day. That is there for 30 days. It's current. It's going to be current, I think, for weeks to come. That the particular patterns that we're looking at, peak D in the monthly chart of the S&P. I spoke about the QQQ. QQQ is running. It is up 0.76. It's kind of struggling, but it is over the 9-period exponential moving average. The IWM is up 0.72, up $1.10 at 153.27. Same thing here. Nice rally. It's going to usurp a lot of energy, and then I think we start to go chop, chop, chop to the downside. Whether we make new lows or not, that's not the issue. The issue is treat this as a counter trend rally until there's evidence otherwise. Here we go. We've got gold, GC. Gold right now is trading down $11. And I said to my subscribers, I'm sorry now that we didn't do it. I wanted to go along the UUP. It's such a terrible vehicle, the dollar bull, it's called. But look at the dollar. The dollar is really showing me all week. It's been saying, hey, don't forget, I'm alive and well. It hasn't broken out, and there's a very quick leg A, then peak A, leg B, peak B, and now there could be an overlapping C if it goes above. Oh man, if it goes above this high, and that would be very positive for the weekly chart. If it goes above the high of the 1st of March, 90.93, that'll be very, very positive in terms of short. And possibly we could begin to think intermediate term. I like it. The EUR USD, listen to this. This is you pulling back just like gold, stuck in this range. And the USD JPY, and this is going to be fascinating. Why? Because that started a really nice leg up. Then it just kind of gave it back. Then it held the 9-period moving average. This is leg B. And it broke above the previous highs. It now has to break above the high of the 21st of Feb. 107.89, and it's at 107.44. This looks good. I like the currency, the dollar currency at this particular point. Still saying I don't see much in gold at this particular time. Look at crude oil. Crude oil right now is trading up a little bit, up 35 cents. Made that peak D. Oh man, these Ds. And what we're looking at is trading range between, if it can close over 66, that's going to be really positive over the next week. But if it closes under 61.50, I'd say, another one of those commodities that's not working out quite well here. And now we're going to go to the TLT. The TLT was down earlier. Yep, it's still down. It's down 83 cents at 119.86. This is going to be really interesting because the TBT, which is the inversion, this is the yields going higher, TBT going higher. This is a nice bit of a breakout. Now you see that trough E having not gone. It just barely went below the 200-period moving average. When we get back, we'll look at my triple yield chart. Basil Chapman, Tiger Conditions Hour. We'll be right back, and we'll talk about yields.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, we're back. What really is positive, what I just picked out right now is wood. The iShares Global Timber and Forestry ETF breaking out in leg E in a new all-time high pattern on the weekly. And there's a very nice turnaround in the HGX, which is trading at, this is the Philadelphia Housing Index, trading at 328.57. Nice bounce from a trough C. Now, what I wanted to show you here was the TYX. Look at this move, up 40 cents. And in the 30-year, the 10-year is moving up sharply after that peak D. And there's only a peak C in the 30-year. And the peak E that was made in the 5-year is also moving up sharply. And I have to tell you, I think it's going to be yields. If there's going to be another sharp downturn in the market, even if it's one of those 500 or 600 pointers that lasts just a short while, I suspect it's going to be nervousness, and yields are going to play a part of that. So this is going to be very interesting, because for 20 years or something, my thesis has been, every time I've spoken about bonds, I've said that the Japanization of our bond yields, the implication being that we go to zero. Well, we followed Japan. We went to pretty much zero. Now I think there's a slight change, and there's like a super tanker trying to turn after 31 years. You can't turn on a dime. This is a slow turn to the upside, so we have to watch this really closely. So far, yields are still kind of where they've been before. There's no big deal. But if they start to break out from, if the 30-year goes above, it's a 32.21 was the recent high. If it goes to 33.30 or higher over the next, in April, and if the 10-year at 29, what is it right now? 29, let me get the exact figure right now. I've got to find out which one it is. All right there. Okay. If it's trading at this moment at 28.27. If it goes to 29, let me give you the exact figure. No, if it goes to 30.70, 30.70, whoo, that's going to be a real problem. And if the 5-year trading at 26.36 right now goes to 28.90, those are the levels. Watch out. Yields are going to become a factor for the very first time. I'm not talking about the market. I'm talking about yields. become a factor for real estate, and etc. Okay, IYR was the question I had. That's the REITs, U.S. REITs, trading right now down 11 cents at 75.65 in a range. I'm going to be watching this closely because this also is going to tell us a lot about yields, implication of commercial real estate, etc. Now I'm going to go to the IYT. IYT, I haven't had a chance to look at it, up 94 cents, up 0.5%, just stuck in a range. And then this is telling me my bigger picture that I believe we made a top of consequence at January the 26th in the down the S&P, the top in the QQQs, and ones in the 175s, and we do remain short from the $1 off the all-time high. I think that the consolidation is going to last a lot longer than people would think. It doesn't have to be as bearish in terms of downside to actual price, but it's kind of bearish in the sense that a lot of really overbought stocks and indices need to have a decent rest. Lovely counter trend rally. What can I say? I had an opportunity to go long early yesterday morning. I thought about it a little too much. I should have just jumped in and said, hey, down 400-500 points without taking out the left side low. Perfect way to go in. I did not. We waited. Anyway, we are alongside. We're participating at least on this counter trend rally to the upside for subscribers. Now, I had a bunch of questions. What was that one question that I had? Stock FND. FND. We looked at this. So the actual question is, Jason. Hi, Basil. If you have time on the show today, can you look at FND again? I saw on the show yesterday that you looked at the home builders, and FND seems to be the leader in the home improvement space. Whoa, look at that. It's in leg D right now. Oh, now it's all coming back to me. Side question, when you're intraday trading, at what peak do you look for the stochastic to be at or above 80%? If trading on a 5 or 10-minute chart, the stochastic reading tends to shift rather quickly. So I was just wondering at what point of the Chapman wave should be reaching over 80%. So today's Thursday. Let's do that tomorrow. Jason, ask me that exact same question tomorrow. I'm going to deal with it in a few minutes because it's really relevant to what we're looking at today. Actually, I'll deal with it right now. I'll come back to FND. Why do I want you to deal with it now? Because the 5-minute chart, let me just show you something here on the 5-minute E-mini. Now, I happen to have been out. I'm looking at these. I'm trading or I'm notating, practicing my craft. Practice is the most beneficial thing that you can do. It's like, playing tennis. You want to practice those strokes, and then you want to perform with those strokes. So I've got this as an A, B, C, and a D in the 5-minute chart. I now have to put a down arrow. Let me explain to you what I'm looking at. You see the way the MACD was way down here at 4 o'clock. Was that yesterday? On the 5th. What is today, the 5th? Oh, midnight. No, yesterday's close. Okay. So there's a bit of a rally, and that rally went to peak A, B, C, D in the E-mini, the S&P E-mini. The stochastic popped up once, and then it came back over 80%, barely, just touched it at that peak D. That to me was a clue. But this one here, when it broke above at 10 o'clock, when it started to rally, that MACD was still very poor. This particular rally that started this morning at about some news event, whatever it was, at 10:30 this morning, that's where the stochastic went above 80%, and it was holding. And that said to me that this peak D, when I came back just in time for my show, I saw it was a peak D. I didn't want to do anything. I don't like to do anything during a show. Occasionally I'll do that. Most of the time it costs me money because I can't get out. But I didn't do anything. I have to put a down arrow because the MACD crossed negative, stochastic crossed negative, and the price went below the 9-period exponential moving average. So I'm just going to show you this for now, but I'll show you something else that was happening yesterday. Look at the bumpy ride that the stochastic gave all day from early in the morning, where the MACD was holding that fast-moving average was just fantastic. Look how it held all the way through for 2 buy modes. It was 4 buy modes altogether to that peak E at about 12:30 during my show. And then we got a pullback. And then after the show, at 1:30, we started a big move up. But look, the stochastic was very choppy. And that's why the price movement, it was difficult to use it. I like to use a combination, but I love the 9-period, the black line, the 9-period, because look what it's giving you. It's giving you that security. And look what happened here earlier on today. the MACD fast moving average, look at that curve to the downside. Now, I wanted to explain to you, we'll do a little more tomorrow. Look at the stock that you've been talking about, how beautiful this is. It went above the MACD right after that peak A, confirmed in the leg A, confirmed it with the 9-period moving average. The MACD fast moving average, 9-period differential. Look how powerful it is. And it goes to peak B, it goes to peak C, and then it goes to leg D right now as we're speaking. So you're absolutely correct. Good eye, and this is a leg in the weekly chart. I'm actually going to call this a G/C. I think it should be really, there's an A. Yeah, in fact, I'm pretty much sure that I'm going to call this, I'll do a little more work later on. But this is very positive, and that monthly chart is still in leg C. This is a good sign. I think that the home builders actually have a chance now to be the counter trend in this move just in the shorter term, and they're acting very well. But look at the stochastic at that peak E in the weekly, and then it pulled
Platinum,
back.
grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. I mentioned in the den, yes, I did have a signal to say, based on my Chapman Wave trend gauge, that there should be a Dow pullback early tomorrow morning to negative before it tries to rally. Let's see if that one works so far. It's been working very, very well. Even that crazy day that was up hundreds and then all of a sudden comes back to zero, comes back to minus and then closes sharply higher. So a couple of questions came up. Yeah, so let me just finish up. FND, leg D at this particular point. If you are in it, I'm going to say to you, just in terms of up at $1.39 at 57.70, up 2.44%. Oh, you know, All I'm going to say is, because of the weekly and the monthly charts, if you've got a core position, I try to hold on to that core position. If you're in a trading situation, let me just look at the 120-minute chart for a second. 120, this is one of those times I don't really want to even say to you, get out of some of it and put that back at 53.13, the 9-period moving average. All I can say is money management says take a little bit off now, and a little bit off you might want to put back. It'll be a little higher than normal, but it's at 57.73. In the next, between today and Monday at this time, if it pulls back under today's low of 55.51, then it's somewhere around the 54.80 area. I'd put that back to work. If you say, hey, for 3 points, 4 points, I don't really want to mess around, I can understand that. I'd actually go for one more day to see if because I think the home builders, just right as we speak, remember I had a question yesterday about ITB, had ITB doing beautifully. That's broken out. So I don't want to get in the way. Just you've got the vehicle that's working. I'm just going to say, try to hold that position. It looks really good. I'm going to change what I usually say in a situation, leg D like that, is to take something off. I'm saying money management says take a little bit off, but it might be tough to put it back in before it tops out in this particular move over the coming days. So if you want an extra point or so, you can hold it. This is a tough one for me. I love the weekly. I love the monthly. All I'm saying is that this is something that you might want to try to squeeze a little bit more out of it. Or maybe, you know what, you could take a little bit off now and say, you know what, I'm going to lower my buy stop and I'm going to put that back to work it and just name that number. There you are. So next question I had was, did the transportation index, have I missed something? I know I've missed something. Oh, I know what I missed. I meant to do that yesterday, and I was so busy with the questions, etc. I forgot. Congratulations to Steve Rhodes. Quite an achievement to be to be listed, let alone number one, Timers Digest. And hey, bravo! Kudos to you. You deserve it. You worked hard for that. Nice. TFNN's proud. Sarah wants to know about the banks. Well, I just discussed the XLF is actually running. It bounced. I think this is a counter trend bounce. I don't think the banks are quite done with their pulling back. We actually along the XLF right now. I like it, but I just don't think it's going to be sustainable. My thinking here is that at some point fairly soon, there's going to be more testing. It doesn't have to break down, but I think the whole the 26s is really the area that I think is going to be the big test for the financial index and ETF. Hope that helped you. XOM. Oh, let's see what XOM's doing. Did it finally bounce? Yeah, there it is. Leg B in the daily. A pretty nice candle in the weekly. Now, you see, the stochastic is different. This is at 8%, not strong at all, but it has crossed positive. The MACDs, this is a work in progress. My guess now is that Exxon is going to be trading between the 79s, it's a 76.04, 78s, I should say, and with good support in the 73s. That's the way I'm looking at it. It's trading at 76.05, up one. So is this a dividend stock? Am I looking out 3 months where it can stay in this range? I think from everything I'm looking at, I would not be surprised if it does more testing of the downside. But remember, I spoke about this. These are the stocks that on the downside, you can take a 1 point risk. When it was in the 73, 74 area, I'd said, yeah, you could take a 1 point risk. Try to trade from the bottom to the upside. When it gets to the upside, you put in a tight stop and you get out. That gives you the dividend, if you're lucky, but it also gives you some capital appreciation. I don't want to be buying it close to 78 when it can come back to 72. I don't want 4 points of risk, 10, 11%. Sorry, 5%. Just don't need it. I'd rather try to work with these particular stocks, these dividend type stocks, from bottom to the top to get capital appreciation or some security. Paul wants to know about the SMHs. So the SMH, trying to rally, it's at 102.88, down 68 cents. This is the area that I've considered to be the weakest, and I think that's going to continue to be so. And we are not anything. I tried to be short for a while. We had great gains before, and then lots of 1% losses prior to that. To my eye, I think this. I've been saying let's wait. Let's have patience to short it. Maybe today was the day. I think it's going to go a little higher, and then it's going to come and do the testing of the 200-period moving average in the 97s. It's at 102.89 right now. It was right at the 104.03 high of the 9-period moving average. Now it's pulled back. I just think it's going to struggle. They were fantastic. They need a bit of a timeout, and that's why the QQQ. That's why we want to hold our short position in the QQQ, because I think the Qs have very limited upside, maybe limited downside, but more downside potential than upside. So, Paul, what was the question? I'm sorry. The question itself was, hi, can you take a look at the SOXL? The semis are having some trouble. Where do you see this bounce going? Please also review Bitcoin. Oh, Bitcoin, GBTC. Bitcoin right now, you know, it had that rally. I said it could have a little bit of a rally. This is what I'm really nervous about. Well, two things. You remember back in early January, over that long weekend with the holidays, I said everywhere I went, people were talking Bitcoin, and I was convinced that it had made a top of consequence, peak D. Was that a peak D in the weekly chart, in the daily chart? Was a peak D in the weekly chart? What was it in the daily? A peak F in the daily. And I said, this is in trouble. And I said, the pattern that we're going to look for is the arch formation, and that lowercase h should break its left side low. Well, it did. It broke that left side low. And not only that, I said the whole of January, early February, I don't think I heard a single person come on to CNBC talk about Bitcoin and not say, this is going to 40,000, 50,000. This is going to at least 40,000. 50,000, it could be even 60,000. I'm saying to myself, what are they talking about? This is the first introduction to the whole medium of Bitcoin as an official presentation, even though it took 6, 7, 8 years. But the last 3 months of 2017, it was just Bitcoin. And then the first 3 months has been Bitcoin, but on the way down, everybody's still looking up, not looking down. The competition, the rulings, the CME, I mean, you can go on and on. Look at this. This is the Bitcoin daily chart. This is actually, Bitcoin trading in the arch formation, struggling. So I think it's got limited upside. Maybe the 6,000 area, the low that was made, will be really good support, but I think it's just stuck. Bitcoin, be careful. That's all I can say. Intraday, if you're good at it, go ahead, do everything you want. But I'm just saying this could be a real problem. So that's Bitcoin. I got another question. Rob wants to know about. All right, let's see. I've got another one. Yep, I'll be back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, everyone. So, let's see, I had okay, Basil. As always, love the show. Curious where you see potential resistance for this positive rally for the S&P index. Thanks as always, Rob. So the S&P, let's just do this. SPX.X. So the way I'm looking at it, there is a left side, right side price time match. If I do the exact plumb line, that was the high of the 13th of March. I found with the H pattern, this is after it's come down. It doesn't work as well as, say, if I go to, let me see if I can do this. If I go to the upside in a cup formation, I shouldn't say it doesn't work as well. It works in a different way. That's really, yeah, that's what I should say. If you're looking at the ESM 8, this is the this is the E-mini, S&P E-mini. You'll see that it got very close. Yeah, let me expand this because it's very important. It's a good question. And this isn't Technical Friday, but it's a good question because I need to give you an answer based on my methodology. You'll see that there was an arch formation from the high of 2883.25 at peak D on the 29th of January in the S&P daily chart. Comes down to 25.32. I think that's like 11.7%, something with 10.7. So now what happens is it rallies, it pulls back, and it doesn't break that low, and then it rallies A, B, C, and it goes to a D. Now, I would normally go to the little doji high there, and I go left side, right side. But instead, I use another technique, and that technique says identify a candle that's the most important candle in your work, and go from that. If you can't immediately visually just say the left side looks like it's going to match the right side, what happened is there was an arch with a second arch making a lowercase m, and that did stop beautifully. It was exactly, the timing was perfect, except it held 25.86, and that was around about the 25th, 26th of March. And then it rallied, and then it took it down. But you see my Chapman wave inside wedge is a technique. I'm thinking here, I've had so many questions. Maybe I'll have an all-day session again like I did before. I love those all-day sessions. Maybe I'll have an all-day session just talking about the Chapman wave inside wedge, target resistance line, and how it goes with the arch and the cup formation. So what happened? Look, we hit that support beautifully. And look what's happened. It goes to the 9th of April, if I'm going to take it as a left side, right side price time match to the next best candle. So the arch formation, because of the complexity of the pattern, says you've got to use a couple of techniques. Look at the 200 period moving average. Look at the 200 period simple moving average. Look at the dash trend line resistance support. Look at what I drew in for the upside. and we went there. We went right to the resistance line, and that says that I've got two conflicting things. One is a low all the way down to 25.52 level, and I have another high that can go all the way to, in fact, we were almost there, can go all the way to the 11th. That's next week. And the 11th, just to get to the high of 26.79.75. And we're into 26.72.25 today. Day's young, and this is a gray leg A. So there are different techniques. So let me answer the question. It's a good question, and my answer to you is that if the MACD is able to close positively for 2 sessions and expand, then there's a really good chance that this very ugly candle of the 22nd with a high of 27.26, so that's about another 300 points or more from here, there's a chance you can get there. But we have to survive Friday, and we have to be Monday. The S&P mustn't be under 26.50 at this particular time when I'm doing the show. It has to be preferably above 26.78, 26.82. If it does that, then we will be going higher. So let me answer the question as simply as I can. Right now, we're in a very strong bounce. I'm treating it as a bounce. I'm expecting that this cup formation is then going to become another arch formation. And that arch formation says, yep, there's a good chance you can go to the 26.80s. And if you survive any pullback tomorrow, that's the target that I would have. That's the way I'm dealing with it right now. If I deal with it based also on the VIX index, the volatility index, look at this. Peak C1, peak C2, peak C3, you can even call it a peak C4, is down at 1948. Hey, the VIX index, people are still holding the VIX index for security. Look, it's above the 9-period moving average of 19.20. What is it? Let's just be safe and call it 18.76. And the 200-period moving up 14.47. People are still quite nervous. So until you see the VIX really drop under 18, that's going to give, if it does drop under 18, the S&P will go higher. Okay. Next question I had. VIX is in the historic range. It depends which history you're looking at. Yeah, if you're looking at averages and things like that, but I would have to suggest to you, this is in the upper range of many, many years. Look, right here, if I draw a line like this, look right here, look how few times did I get that line? Yes. Now let me make this nice and thick, and you'll see exactly what I'm talking about. Wait, get a heavy one. Let's make it a color that really just knocks you out with blue. Look at that. Look, we've only been above that very, very few times in the past. This is a daily, the monthly chart in the past 6 years, 7 years. Let's go back. Most of the time we're in the 14. That's more for me about the average. So this is high, and that's why I'm saying if people are still buying insurance, fund managers, etc., that's going to keep some pressure on the market. But if it starts to pull back, that means buying pressure is pertaining to the different indices. All right, now, next question is, I had a question. And the question was, within the context of the markets, now how can I phrase this? Within the context of the market, where we are right now, let me make this a daily chart. Let's go to the SPY, just because most people can type in SPY because they have SPYs and you have to find the S&P index. What is this H pattern pertaining to in terms of history? Well, look at this. If you go to, this is a daily chart of the SPY, 286.63 was the high. It goes down 11.7% to the 252.92 level on the 9th. It has a rally, and that rally takes you to about 3/4 of the way up, and then it pulls back at 280.41. It pulls back, and it makes not a lower low. It goes to 254 something, 0.67, a higher low. what that says, look at the W formation in the daily chart. It says there should be a rally. But until the histogram starts to trade for about 3 bars really positively, nicely in the plus sign, that's the 0% line of the MACD, there is a chance that this first leg is going to give you an incredible amount of information, and that information pertains to the match of the left side takeoff. I'll be back in a moment.
There are 5 reasons traders and investors fail to spot bear markets. It's a set of 5 very specific patterns that have preceded every bear market during the last 130 years. I'm Steve Rhodes, author of Mastering Probability and the #1 market timer in the nation as ranked by Timer Digest for the S&P 500 for the last 3, 6, and 12 months. You see, timing is everything. And on Wednesday, April 11th at 5 p.m., I'm going to share with subscribers exactly how to time the next bear market. Look, the last 3 bears averaged a decline of 49%, which means you've got to earn 82% just to make your money back. Wouldn't it be easier to avoid the next bear market altogether? Sure, countless experts tell you that markets can't be timed, but what they're really saying is that they can't time the markets. So let me teach you how. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Don't let that next bear market eat your porridge. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, folks. Don't forget, Steve comes up. You've got Dave White. You've got Tom O'Brien. Thursday's the day. So I was asked about silver. SLV I'm going to go to right now, the iShares Silver Trust. You see the monthly chart. You see this triangle, this kind of wedge formation, pennant formation. This is very important because it says that the range of silver is getting narrower and narrower and narrower, but it's not breaking above the downtrend line, which happens to be right now coinciding with resistance in the 15.70s. And it's trading at 15.45, you say, what's the big deal? Silver to move up 40 cents or so. How can it not do that? It's done it before. Well, this is what trend lines tend to do. However, the support line is way down in this, coming to the apex, is down in the 1510s. Now, let's get to the nitty-gritties. Silver, as far as I'm concerned, this is for a day like this when the dollar's acting quite well, this is a pretty good candle. But what's really most important is that the MACD is turned down. Stochastic's very weak at 45%. I'm going to suggest to you that you can have trades in silver. My thinking is that if I look at the bigger picture, look at this. It went to a rogue wave peak F in the daily chart, and now it's gone sideways. And I've shown you ExxonMobil. There are a whole bunch of charts that have this pattern where it pulls back and then it just goes. In the Chapman Wave methodology, for those of you who do my webinar, remember I showed you the pattern where the lowercase h can become a lowercase m and keep going and try your patience. So I'm just saying that watch it closely, because if silver closes underneath 1519 was the low of the 20th of March. If it closes under that for two out of 3 sessions, I think it's going to go quite a bit lower. And now it's changed the trading range and made the 1550s very strong resistance. So you want to see this happen, and it could just chop around here. If silver at any point in the next week suddenly starts to trade above 1590, that will be the first sign that says silver is now going to be the confirmation that gold can go higher if gold is also participating. So I hope that helped you, Ruby and the Dan. A couple of quick questions here. So the bias right now on the short term, unless the jobs number tomorrow really upsets everything, the bias should be up into next week, and then we'll assess what's going on, maybe by Tuesday. So have a wonderful day. Check out my opening call. It's my daily newsletter, very comprehensive, tells you what to look for every day, tells you at 11:10 what to look for. I'll be back tomorrow. Have a great day.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.